All right. Good day, everyone. Good to have you here. Welcome to the Tatro Show. Pretty excited about our guest today. Bringing him in all the way in from, I think, his home. I think he's working from home today. I'll bring Martin Roberge in right away. Bienvenue. Welcome, Martin. So welcome to the show, Martin. Pretty excited today. Catching you maybe on holidays? No, you don't take holidays, do you?
No, well, I do, but in August only.
Okay. You are in Montreal, correct?
Well, South Shore. I'm in Candiac, which is about 20 minutes from Montreal.
Okay. For those of you that don't know, I'm Rob Tatro from robtatro.com, portfolio manager here at Canaccord Genuity Wealth Management and the Tatro Wealth Advisor Group. I've introduced him, but I'll bring him again more formally. I'd like to introduce right now Martin Roberge. He's Managing Director, North American Portfolio Strategist here at Canaccord Genuity. He's got a CFA. He's been doing this for a while. He's been right on a lot of calls in the past since I've gotten to know Martin. Incredibly smart guy. If you're watching on YouTube, please click the red button to subscribe. Subscribe to our videos, subscribe to our channel. There's some highlights today. There's some, before we get into it today, Martin, got some pretty neat material that we're going to cover today. A couple highlights. The Dow rallied hard today, up about 400 points here just before close. Overseas markets were up big. Amazon, Netflix hit records. Anything surprise you today in the market?
No, it's we're continuing to see the same large cap or mega cap sectors driving the market higher. It's getting a little bit broader, including some cyclical stocks. But obviously, it was a good day from a breadth point of view. But most of the performance comes again from the U.S. mega cap stocks.
Not too much of a heavy day in terms of news, Martin? Like these July and August days, they get pretty slow in terms of macroeconomic news, right?
Yeah, once you pass the job numbers and the manufacturing PMIs, it tends to slow down. We have the regular stats coming out every single week, but it seems like the media is certainly slowing down and in terms of reporting the good and the bad, while we're obviously going through the summer doldrums right now in terms of financial market coverage.
The volumes are also historically lighter in July and August. We're also keeping an eye on some job numbers that came out last week. We're going to be watching those this week. There's a front page article on BNN Bloomberg today that says that the headline is Bank of Canada says business sentiment is at its lowest since 2009. Any thoughts on that?
Well, that's like the survey was taken about a month ago, I believe, when we were just about to rebound and about to reopen the economies around the world. And obviously, if you look at the shorter term data, especially those from the United States, we've seen that the reopenings have the reopening of various sectors of the economy has led to a rebound in consumer sentiment. And business sentiment will take a little while because companies are not in the mood to spend. But obviously, consumer, with all the backstops, income backstop that they've received over the last couple of months, they are obviously more inclined to spend some of that money right now and stimulate the economy a bit. And
let's talk election real quick. I know you're not a political scientist. We had Tony Dwyer on our show last week. He said, I'm paraphrasing. I don't want to quote Tony, but I think it was something along the lines of Democrats or Republicans. There's so much spending that he doesn't really think it's going to impact the market one way or another. And he thinks it's mostly priced in. He refused to kind of comment on what he thought would happen. Do you have any sentiment, one, on what might happen in the election, and two, what might happen if there's a surprise?
No, I have a low degree of conviction. Historically, though, like those are the stats. When there's a sweep and the incumbent is being defeated, the market normally does relatively well. So, but we're talking about returns that are pretty much in line with like the 10% annual return. So it's just that it seems like the downside risk of markets lower when Democrats are running the country relative to Republicans. So in terms of upside potential, probably the same, but in terms of downside risk, Democrats do a better job.
Okay. Also, the news today, last headline here that we'll cover before getting into some pretty neat, some presentation slides that you prepared for us. Warren Buffett finally put some money to work, put $10 billion in an energy play in the U.S., sitting on 100 and I forget how many hundreds of million, 150 billion or something like that. He put 10 billion to work. What are your thoughts on that deal? And has he played this too conservatively?
No, like he's trying to it's kind of a broker type of deal where he clips obviously a commission on transporting that nat gas around the United States. So it's he's going to be controlling about 20% of all nat gas transportation around the country. And Warren Buffett tries to buy low and obviously sell higher. And as you know, nat gas has been trading below $2, like hit almost an all-time low a couple of months ago. And I think he's just smart about reinvesting some of that cash, that hoard of cash he holds in his funds, and redeploy by buying low, because a lot of stuff has done extremely well from the March 23rd low, and he's obviously looking at some of the laggards, and nat gas assets have been obviously lagging other risky assets lately.